Before today's opening bell, three of the nation's biggest banks reported their latest quarterly earnings with mixed results. Also mixed investor reaction. Shares of J.P. Morgan Chase slightly lower for the day. Citigroup got a 3% pop, and Wells shares fell almost 3%. Kayla Tausche takes a closer look at those bank earnings and what it tells us about the banking business.
Banks are a bellwether for the U.S. economy, but they're still waiting for their breakout moment. A trifecta of companies reporting today with few signs of growth. Citigroup beating estimates, Wells Fargo meeting them, J.P. Morgan missing. In the third quarter, J.P. Morgan saw its profits fall in nearly every unit. Total loans up just 2% from the same quarter a year ago. Much of the growth coming from loans made to high net worth clients in asset management. Any signs of life in investment banking were wiped out by a $1 billion legal charge the company signaled would likely go toward a future currency trading settlement. Over at San Francisco-based Wells Fargo, the mood was tempered but better. The bank met Wall Street expectations mostly because it cut costs to offset mortgage businesses that are chugging along at a slower pace. As the economy improved, Wells, like other banks, released funds set aside to cover bad loans to cushion its earnings. This time, it had less of that money to release. Citigroup had a bit more, which helped to boost the bottom line, along with above-average trading revenues and a surprise profit at its bad bank. But not all of Citi is rosy. CEO Mike Corbat acknowledging Mexico, its biggest growth bet, is getting costly.
I think we've made some meaningful changes to the way we come to work and think about things in Mexico.
Among those changes, disassociating with one unit of its Banamex business where more fraud was uncovered. A federal investigation at Banamex is ongoing. Citi's also shuttering its consumer business in 11 countries, including 6 countries in Latin America. KBW's Fred Cannon said those ambitions had been dragging the stock.
Citi, to be honest, has been a bit of a value trap for over 2 years now. We keep expecting a real lift. Is this really the beginning of the lift? Maybe, but remember, Citi has an awful lot of the global exposure folks are concerned about today.
Global risks, once the hallmark of big banks, will now be front and center as Bank of America, Goldman Sachs, and Morgan Stanley results come out this week. For Nightly Business Report, I'm Kayla Tausche in New York.